Welcome everybody. This is the Tuesday evening Viper Trading webinar. Due to technical circumstances, we are getting a little bit of a late start, but we're going to try to go ahead and knock something out here and salvage the rest of the evening. We'll start with our standard disclaimer. Here, all communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Okay, we had a little power problem here, but we managed to get through it and boot Ninja back up. I wanted to show an ES chart, but it is still loading, and hopefully it's going to load up for us here. It's locking up. It's locking up. Here's what I'm looking at right now, spinning top. See it spinning? Oh, there we go. Okay, all right. So there's been a change in topic here. We're not going to talk too much about targets and stops and trail stops. The consensus of the team was to look at examples of trades that did not work out. And how to know that they're not working out, and then identify to get out of them quickly. Let's do that right now. Let's look at some examples of trades that didn't really work out. And I'm gonna start right now where we're at. I think the first example is right at the okay. So we're looking at ES. We're looking at a 2-range chart, as I mentioned earlier. You can trade a 4, you can trade a 3, you can trade a 2. It's all personal preference. I've talked to several traders, and they say, why do you like the 2? I think the 2, given the volatility of ES, enhances the detail of an instrument that otherwise, would be hard to track. But if for some reason a 3 or 4 is better for you and you like it and the 2 is too fast, then don't trade the 2. It's an optional thing. Okay, normally we trade a 4. So here's an example of a short. So let's go in. Let's set the framework up for this as follows. Yeah, I think there's been with all the volatility we have, sort of it's like one of those things where there's like a lot of, you're at a buffet. Here's probably a good a good analysis. You're like at a buffet and you're hungry and you want to eat, you want to taste like everything, but there's so many food and different options to take that sometimes you don't know which ones to take and which ones not to take, and you fill up on salad and then you miss the dessert. Right? So there's 3 types of trades, right? Everybody knows the 3 types of trades. Let's look at the downtrending example here on ES. There's what we call the minimum criteria trade, which is a retracement up into here on a short. There's the mid-band trade where the market comes up into here. And then there's the deep retracement trade, which comes deeper, in the case of the short, into this area right here. Now, I've said this before. If you find that your success rate on the shallow retracement trade and the deep retracement trade aren't as high as the success rate that you wind up getting with trades that are located around the mid-band, then maybe you are a mid-band trader and should focus solely, for now, not forever come to pass in your trading career, for now on mid-band trades and forego the others. Now, the problem with that is that when you have rapidly moving markets that you want to get into and the retracements are shallow, here's an example over here. Here's a couple of examples here where technically that met minimum criteria. Yes? Technically this meets minimum criteria, right? So they don't get to the mid-band. So in some cases, if you don't have at least a shallow retracement trade entry type in your trading repertoire, your toolbox as it will, what will happen is that the market will trend only giving you shallow retracements and never getting back to the mid-band, allowing you to get in. So in the case of this drop here, the only mid-band retracement for now was right here. And all these other ones you would have missed if you rule out the minimum criteria trade. Now, that being said, that's the trade-off. If you say, look, Charles, I'm just not good at these other deep retracements and the shallow retracements, I lose money. I don't care if I miss a trend move because I would lose money on them anyway. Well, then that's your trading style, and you have to decide for yourself whether to do that. Now, in this case here, you can see that when you got in here to these retracements, they didn't give you much, right? You got a scalp off here, maybe. You stopped out, had to re-enter. This one gave you a little bit of a run. Maybe you stopped out here and then had to re-enter. This is extremely, it's trending down. I think clearly everybody can see that, but it's doing it in a very choppy manner. And so you have to deal with that. Some instruments are like this, okay? Let's look at the examples of the ones that didn't work out. Now, here's a good one right here that meets minimum criteria, depending on how and where you boxed it. You could have been filled, I don't know, on one of these bars right here. Any one of these bars right here could have gotten you short, and then it immediately flipped in your face. Right here. How do you know when to get out when the trade almost immediately goes against you? Well, let's say you were filled here on the close of this bar at 34.50, and you had a 10 tick stop. So 10 ticks would be 2.5, right? So there you already 36, 37 almost, I think, right? 2.5, yeah. All right, so a 10 tick stop's going to be way up here. So the first thing that's obvious that you do when you're looking for a rollover here like this, and you get in, and the market comes up and starts hitting its head against this resistance point right here, you want to do two things. And let's blow this up because this is a really important topic that almost every single person in here brought up as an issue here tonight. And let's get really specific about it. Let's say you're filled short on that bar right there, and it goes a couple of ticks in your favor, and then immediately trade back up in the box. Now, the first thing you got to do, and this might sound corny, is remain calm. Okay, because and you know what I'm talking about. I know a lot of traders, as soon as they get in a trade that's upside down, they start to panic, and your palms get all sweaty, and you get nervous, and you feel like you're going to take a hit, and you don't want to deal with that. And so it's kind of like it's what's the human reaction? Fight or flight, right? Fight or flight, the old primal thing in our subconscious or whatever. You got to stay calm, and you got to look closely at what the bars are doing. I think everybody can see that clearly in this condition, this resistance level is holding. Now, let's say you even get filled short on this bar right here. At what point in all these bars that formed, say you're filled, say you're filled here or you're filled here, and all these bars are going on. At what point in here would it be clear to you that there was not going to be continuation down here with short trend continuation to the downside, and the things have gone awry? Let me give you some choices. A, I'm going to show some bars. B, in fact, I'm going to draw B like this. I'm going to engulf these two bars with B. C, or D. You got to type in a letter. You got into a short trade off of this resistance level, minimum criteria met. You get a little bit done in your favor by a couple of bars. It immediately retraces against you. Your initial stop is sitting way up here. However, you're watching these bars. And by the way, there was plenty of time. This is after hours, so you probably wouldn't even taken this trade, but it's still a good example. You know, you got it filled, I don't know, at 1534, 1541. It took, 2 minutes for that, 3 minutes for that to form. Here you're 46, 3 minutes later. Here you're at 51, just like 9 minutes later. It dinked around in here for about, 15 minutes. It's not like this happened in 30 seconds and you had to panic and get out. I mean, there's time to watch these bars and your P&L going up and down and up and down. So here again, you entered on one of these two bars out of the box. You get a BIP in your favor. And at what point would you decide to dump the trade? Point A, that circle right there. Point B, these two bars right here. These three bars right here. C, this area right here. These bars. Or D, way up here. Type in a letter. I'll give you 5 seconds. This is really important to talk about because we all get stuck in these, and I the toughest thing is to wind up in a hope trade where it's dinking around and your P&L's going up and down, mainly down, and you're debating on when to get out. Now, as you're pondering the ABCD dump it question, and I see a lot of letters coming in, and we're going to come up with how to approach it in just a second. But I think the bigger question, and when you're dealing with this, as you try to remain calm, is it better to dump it quickly and get out, or is it better to wait when you're in a loser? Is it better to dump a trade that's gone bad quickly? Or is it better to wait and see how it turns out? Because if you think about it, that is what the ABCD question is. It's clearly moving against you. There's no question about that. You might have came back to break even here, depending on your actual fill, slippage and whatever. But you were only probably 2 ticks to the good on that move right there, and the rest you were upside down. I mean, you can. I don't know about you, if you've been trading for a while, you can start to get a feel for them pretty quickly. I mean, if you get in and it starts moving in your favor, you can feel pretty good about a good shot, a shot at winning trade. But if it starts flipping against you and you're down the whole time, yeah. Okay, so the answer is quickly. In my opinion, I would say B or C would be the dumping point. Now, why is that? Well, it obviously wouldn't be A because A's resistance was holding and it hadn't taken your stop out yet, right? The first clue that you weren't going to get down to where you got in, let alone the bottom, was when it did this. And arguably, it put in a higher low. Comes and slightly kisses and breaks that resistance level, and then definitely by here, which is circle number C, letter C, this was the dumping point. I would have probably dumped it somewhere in here, but definitely by here. And you really don't want to let it get all the way up to here because this, in fact, is your full stop out point right here. If you let it go to D, then basically you really didn't manage the trade. You just let a full stop out happen, right? It's better to cut your losses quickly, regroup, go to a different instrument, find a different setup, however you want to deal with it, than to wait and take a full stop. In this case here, let's see what the damage could have been. You're filled at 34.50. You pull the trigger to get out here at 35. That's 2 ticks. 35 and a quarter is 3 ticks. 4 ticks would have been up in here, and a full stop out for 10 would have been up in here. So you don't want to do that, right? Let's look at a couple other losers. trades that you could have got into but didn't work out. Let's go back and look at one that did work out but might have been cause for concern. I'd say this short right here off the midband. Now here again, you're at the close. Can I clean? Let me clean all this stuff off so we can get a clean chart to work with here. I think let's just start with this area. Now, this is a trade here where if you had boxed it at the midband, let's say that your box looks something like this. And so you would be filled on the bars that close below the midband more or less in here. Now, I don't know if you got a scalp off or not. Let's say you were filled at short at 44 and it got down here to 43. This was 4 ticks depending on your fill. If you had a 4-tick scalp, you might have got it. It's hard to say whether it would have filled or not. And then immediately came back to above your entry and you were upside down again. At 30.44, a 10-tick stop would be 2.5 would be 46.50. So that's way up here. Yeah. So your initial stop's way up here somewhere. Now, if you notice in the short, in the case of the short here, much like this other example over here that didn't work out, over here, the one we just did, this one right here. Notice how when you're shorting these resistance lines, and ES is notorious for this, is to closely watch the resistance level right in here. This needs to hold. So, I mean, one tactic, if you don't want to get into too much judgmental, sort of thinking about it, is to go a tick or two above the swing that should hold with this. And if it takes it out, it takes it, and otherwise you just stay in the trade. The other one would be that if you got a 4-tick stop out, or a scalp out, in this case your 10 ticks is still way up here. Actually, I think it'd be more up there like that. From here, fit with your short fill on that bar right there, right? So you got a choice. You can come down, you can put that just a tick or two above the swing that should hold, which it did, and you would just simply stay in this trade. And if you had a 6 or 8 tick scalp target, then it'd be filled like down in here somewhere. Right? If you do the tactic where you take a 4-tick scalp and then you move your initial stop to 2 ticks behind your entry, then you would have actually stopped out. You would have netted 2 ticks, and then you could have re-entered over here. Let's look at examples of long trades that didn't work out. Let me find some long. That's going to be hard because the market's been selling off so heavily for the past week. But let's look for a couple of long trades that didn't work out. I mean, is that helping to see what to do? Yes? All right, here we go. Here's a good long example and a chance. Stand by for 1 second, please. It's still confusing. That's not helping. All right, I'm going to do it. I'm going to do it a different way. I'm going to show you getting into a trade of a minimum long criteria. And I'm going to help you in these first couple ones that didn't work out. And you're going to type in a D when you think you should dump it. Okay, so you already know that you're getting long. I'm going to show the box. Okay? And I'm already telling you that this trade didn't work out. And I'm going to show a sequence of bars after the entry of the trade. And then you're going to type in a D when you think it's time to dump that puppy. Are you ready? All right, stand by. Here we go. I think this exercise is going to help. I think this is going to help. I think maybe the way I'm explaining it is not very good. But let's pretend that you're in a trade, you're getting into a trade, and we'll recreate what you're going to be going through. Okay? It's a minimum criteria long entry on ES. The chart just ran away from me. It's always easy to look back on the winners. It's always tough to go back and figure out what you did wrong and what to do to deal with it. Okay, are you ready? Here we go. We're going to do this exercise. And I'm going to show the trade entry right here. Minimum criteria entry long on ES. Everybody sees it, right? I'm going to advance the bars that occurred after this entry, and you're going to type in a D when you think it's time to get out. Okay? Let me blow the bars up so real big so you can see them. All right, here we go. All right, you're in. So it would have been at 12:23:24 p.m. Pacific time. Remember, you're going to type in a D when you want to dump it because you're filled long out of the box on this bar right here. Okay, here we go. It's 12:25. Been in the trade about a minute and a half, 2 minutes. Okay, let me stop it there. Here's what I want everybody to work on when you get into trades. And this is important, and maybe what's happening is we're not spending sufficient time explaining this. But we are now. I can clearly see this is a problem, and we are going to address it, even if it takes 5 more webinars to do it. But the breadcrumbs that the market is telling you, well, I'm going to explain that right here, Brian K. I see your question, and I think I sense why there is some confusion. It's not necessarily when, in the case of the long trade, it's not necessarily a D if it comes back in the box a little bit. However, let me show you the things to look for when a trade is not going in, when it is not working out. This thrust here, if the trade was going to work out, should have gone where? Want me to help you out? If that trade was going to be bona fide, good trade, workout, long trade, should not have the trade upon your entry gone to here, at least. Yeah, top of that range. Right. And did it? Did it make it up here, yes or no? Well, obviously no. No, it didn't. It didn't even come close. We pull back into the box here, and we get a slightly higher low from here. And so maybe we're feeling a little bit better in the fact that we are slightly upside down, but you're staying well above the swing on the entry here. Now, after this point right here, the market does this to here. Now that you're looking at it, is it pretty obvious that that is a cause for concern? Not only did you not get back to here, but you're not even breaking here. Can everybody see that what you're putting in now is a series of lower highs and lower lows after your entry? So, in my opinion, when the market came back below, I would have taken the initial stop and dragged it. When this swing formed right here, here's what you would do. So let's see, it filled at 44.50. 10 ticks below that would be 42. Okay, so your initial stop's way down here somewhere. 10 ticks. Okay. When this swing formed, and at the time when it started to do this, at the time it was happening, let's go back and recreate it. You did not know when it was pushing up here whether or not there was going to be follow through all the way up to here. You were hoping so because you were almost kind of a little within a tick or two of your entry, yes? Now, when this price action was occurring right above and below your entry, should you just leave a 10 or 12 tick sitting way down here alone, not being adjusted? What might you want to do to prevent getting a full stop out? Where would you put it if you were going to drag it up? Let me help you out. How about right here? Would you not agree that if it breaks that and goes lower, then you're not getting any follow through up here and that trade's done? That makes sense? That's good trade management right there. Save yourself probably 6 or 7 ticks. If you would still taking a hit of 3 or 4 ticks, but I'd certainly rather take that than 10 or 12. Here, let's do another one. Let's do another one that didn't work out. Let's do another long one. Here, let's go back up near the open. I'm looking. This is all like closing stuff, and the market's kind of weird when the market after hours. So you're not getting really a good representative of what really is going on. Let's go back to the trading session for ES. Go back up all the way to the open and shortly after the open. Okay, here's 8 o'clock. Here's 7:41. All right, let me do another one here. Let's do another long one. Here again, I'm going to help you with this. I'm going to show you trades that we got into, that I'm just going to tell you straight up they didn't work out. But you're going to try to figure out where you're going to get out of them. Okay? Let's do a handful of these. Okay, here we go. Okay, you ready? Okay, here you are. You're getting long. I'm going to show you the box entry on a minimum criteria. Barely meets it, but it does. Barely, just barely. And then you type in a D. I'm going to advance the bars that occurred after your entry, and I'm helping you out, telling you already it didn't work out. Okay, so you know that. But where are you going to get out? Where are you going to dump it? You're going to type in a D. Here we go. Here's another long trade that didn't work out. Here we go. I'm going to start advancing the bars right now. This is at 7:32 a.m. Pacific on ES. There's the box. Here we go. Get these bars nice and big. Barrier at 7:33. It's been in the trade about a minute and a half. Okay, I'm going to stop it right there. Now, depending on how you had this box position, it's hard to say whether you got a scalp off. You probably at least got a scalp off. So what does that mean? That means that you, let's say hypothetically, you were filled on this bar right here, which would have been at, say 51.75, and it go all the way up here to 53.50, almost 53.75, 51, 53, 2, 8. Yes, if you had a 6, you know, that's the thing on ES. You really want to go for more like a 4 or 5 tick, 6 tick stop. I mean, scalp. I know on the bigger movers you're going for 8 or 10. You want to cut that in half on a yes, because you can see here you want to get your scalp off quickly. Now let's say hypothetically you got a 6-tick scalp off right here. So it's starting to work out in your favor. So you're out of one contract, but then it starts to rapidly move against you. So what would you need to do? Because your initial stop would be down here somewhere. I don't know, probably down here somewhere. So let me be clear of what's happening here. Here's a scalp trade, 6 ticks. And your initial stop is still sitting 10 ticks down here. What do you do? What's the proper way to manage this trade to not allow it to turn into a loser? Is there something you'd want to do with this? Yeah, you can move it up to within 2 or 3 ticks of your fill. And then when it came back down through here, you would be stopped out. Everybody see that? Does anybody do that, by the way? I know some of you do. You get your scalp off. This is what we look for all the time. You want to get a scalp trade off as quickly as possible and get this up to within 2 or 3 ticks of your entry fill. Many of you do it. Move it to break even, says Toby. Okay, good. Good. Let's look at a mid band that didn't work out. Those are examples of extremes at minimum criteria entries. But let's look at it. Let's see if we can find a mid-band trade that just didn't work out. Are you ready? Let me show a series of them that didn't work out. You want to see a whole series of them that didn't work out? Ready? I think I can show you. Well, I mean, depending on your entry, this may or may not have got a scalp off. Probably it would have been very close. Maybe not. This one definitely stopped out. This one, you might have made some money back to the mid-band if you're still getting long in here. And this one, definitely, well, depending on your fill, maybe you got a scalp, maybe you didn't. Really depends on where the box was. If you got filled on that bar, you definitely did not get a stop, and that stopped out. Now let me ask you a question, and this is a observation of price action question. Is there anything going on this chart that would have prevented you from taking those 4 trades? Is there anything going on this chart in this area right here that might have prevented you from even taking those trades in the first place? I'm circling it with my cursor. Okay, I'm getting some good answers coming in here. Mid-band color, background color. Let me help you out a little bit. How about this right here? Is there anything that's going on here that's sort of overarching the background colors and the bar colors? Is that an uptrending channel or a downtrending channel? So what I'm trying to show here, and we're going to run out of time, but it's okay because we're going to pick this topic back up next week, is that you can see that it's a downtrending channel, absolutely. You're getting a series of lower highs and lower lows, and in no case did any of these bounces get you anywhere close back to this top. And so if you get popped, if you see a descending channel and you're still trying to get long and you get popped once or even twice, then you don't continue to fight that. This could be a trend. Well, it turned out to be a trend change. Everybody sees that, right? It eventually broke support and didn't work out, and then down she went. It takes some time and effort to be able to see swing levels occurring in real time, and then be able to filter your trades accordingly. And I'll tell you what will help you with that real quick is taking a loss or two, right? All right, listen, I'm going to go ahead and wrap. This was just a short session before Thanksgiving. I'm going to turn off